So again, welcome to Fixed Annuities 101 with Forethought. Again, my name's Jason McClellan. We have Bob Bursky with us. I'm going to turn it over to Bob, but at the very end, I'm going to come back on and talk to you for a few minutes about the Insurance Advisors Direct Sales and Marketing Success System for Annuities, and we'll share some of the things that we have available to independent agents across the country who are interested in either getting into annuities or are already currently active selling annuities. So we're going to go through that at the very end, but as of right now, I'm going to turn it over to Bob Bursky. Bob is going to go through some fixed annuity sales ideas as well as the Forethought annuity product portfolio. Go ahead, Bob.
Hey, Jason. Thanks again for having me on the call today. Really appreciate it. And to, again, everybody that's joining us today on our webinar, thank you for joining us. And we are going to spend some time today not only going through some annuity concepts and what's going on in the annuity world here today, but we're also going to focus on the Forethought product line, as Jason mentioned, a great indexed and fixed annuity product line that I think if you haven't done annuities, you're going to find that they're very simple products. And if you have done annuities, I think you're going to find that they're very competitive across the board in the industry. So just a couple real quick housekeeping items for our presentation. Jason mentioned we're on mute today, which is typical, but we love questions, so we don't mind if you have questions. We'll dive into those, whether during the call or after the presentation gets done here. We'll make sure we get all that taken care of, and as we go through the information here. But of course, you got Insurance Advisors Direct 800 number right there in front of you. So if there's some additional information you need afterwards as well, please reach out to them, and then they'll be able to handle any additional questions. So with that being said, let's jump in here a little bit. We're going to talk about Forethought. First off, and talking about Annuities 101, just a quick little breakdown there in front of you. What is a fixed indexed annuity? And it is a fixed indexed annuity. So you do not need to be securities licensed. This is a fixed product line. Your client cannot lose any money. It's a fixed product. The difference of the fixed indexed variety of fixed annuities is how they credit interest. So I'm going to show an example during the presentation here. I'm not going to go through necessarily the minutiae, nuts and bolts of it, but just keep in mind this is a fixed product. It is not a securities-based product. You do not need to have a securities license to sell this. There's just a little bit of a difference in how a carrier will credit interest with a fixed indexed annuity. And we're going to really talk about the strengths of the fixed product line for the what I would say is that retiree market, that 55, 60 and over marketplace. So here's an article, and I really like this article. It was done on MSN.com Money a couple of months back. It was a survey done by TIAA-CREF, and it really found that most Americans, one of the most important things in their mind with retirement is not outliving their money. They want to know that they've worked their whole lives, they've got their nest egg, and whether or not they live to be 75, 85, 95 or older, that they are going to have enough money, that they have saved enough. So guaranteed lifetime income, and that's going to be a common thread in our presentation today, is a critical importance to retirees. So with that in mind, we're going to talk about how a fixed indexed annuity can really fit the bill. Now, one of the other things you'll see in this little article here was that although most Americans are really interested in this guaranteed lifetime income, only 14% of them have actually bought an annuity, and they're calling that the Annuity Disconnect. And it's really just one of those things where either they're not being educated, either at some point in their lives they've heard something bad about an annuity from the guy doing their lawn service, or one of their neighbors or a relative. And all I would say to you is that like every industry, like every market, whether it's insurance, financial, or something else, as time goes on, things get better. Competition makes products better. So when somebody says to you, hey, I heard about those annuities, maybe that's not for me, I would just always come back and say to them, listen, have you heard about the old kind of annuities, or are you talking about the new kind of annuities? Because most people don't understand how an annuity works, and they're just pulling something as a objection to you. Just like every industry, think about cell phones. 1980s, right? They started, big brick phone. Then we go into the 90s and early 2000s. Now we got the flip phones. We've got the Blackberries. We're coming along pretty good and strong. We think we're doing pretty well with them. And think of your phone now. Let's be honest with each other. Our phones now are a computer that also make phone calls. Listen, that's the reality of the situation. Over time, things have gotten better. Who knows what they'll look like 10 years from now, but like the phones, the indexed annuities and the annuity marketplace has gotten much more competitive and much more client-friendly. So here we go, bull, bear, or chicken. When you're talking to your clients, what are they thinking? They thinking the market's still going to go up. They're thinking about the market at some point is going to go down. They're seeing all the stuff in the news. They're watching Fox, and they're seeing about the Iran deal. Something's going to happen. Or listen, are they paralyzed by fear? They're not sure what the heck to do. Where do they do with their money? And many times that can be the most dangerous place to be in, because paralyzed by fear, by not doing any action, you really are making a decision just to stay pat and then maybe not adjust as necessary. So the indexed annuity place can really do a great job, whether your client is really looking at growth, whether they're worried about security, or whether they're really not sure what the best option is. So here's a little quote I pulled out. It's an old one, but listen, I'm not as concerned about the return of my money as the return on my money, as the return of my money. And this is a quote from way back when, and it goes back to the retirees. They want guarantees. They're not worried about market risk. They've accumulated their money, and to a certain extent, they want to make sure that that money is going to be there for as long as they live. And this is, again, where the indexed annuities can do a great job. They're going to provide guarantees, guarantee of principal, guarantee of the interest that the product earns, and then also guarantee lifetime income that they cannot outlive. So a fixed indexed annuity can do a lot of great things for your clients. All right, so when you're talking to the client and they say, and you're looking at them and they're pulling out their statements and they're talking about what they have, does all their money go into a fixed indexed annuity? Does some of it stay in securities? Well, there's this old rule. Now, I didn't come up with this. If you Google it, you're going to see the rule of 100. It's an old financial rule. And really the crux of the rule is, as we get older, we are more conservative. We don't have as much time to make up for market risks as we get older. So the rule of 100 is at very least a good jumping off point. Take the number 100, subtract your client's age, and that's the most amount of money they should have risk in the market. Again, you're going to have clients that are more conservative, and you're going to have clients that are more risk and more market savvy. So that's going to be a little bit of a moving target, but at least it's a good jumping off point. So I think if you look at the rule of 100, it's been around for a heck of a long time. And I think it's at least a good place to start talking about your clients, diversification of their money, of their portfolio, and whether or not some of that money should be used in a fixed type product like a fixed indexed annuity. So conceptual selling. Most people, or most agents, I should say, that are selling annuities, they really do a good job of conceptual selling, talking about the guarantees, talking about all the things that an annuity will give to them. You'll probably not come across a client that's going to say to you, hey, Mr. Agent, listen, I'd like to buy one of those indexed annuities, and I'd like to have this crediting strategy, and I'd like to, apply that rule of 100 and take 65% of my money. But we have to talk about the clients with the conceptual selling. So here's a little story that we came up with called the analogy, the blackjack analogy for a fixed indexed annuity. So everybody knows how blackjack works. You take $10, you put it down. If you win $10. If you lose $10. Now imagine if there was a new game called index blackjack. In our other table number 2 of index blackjack, when you put your $10 down, and you win, you're going to win somewhere between $3 and $5, $3, $4, $5 on average. But if you lose, you're not going to lose your money. You get to keep your $10 and you get to play again. And that's what we're talking about with an indexed annuity. Being that it's a fixed product, they put their money down on the indexed annuity blackjack table. They cannot lose that money. So it's important to know that conceptual selling, really making an annuity more than just what they've heard or what they don't understand an annuity, really use that conceptual selling. So this is a little story that we came up with. There's other ones that you can certainly come up with, but I think there's a good idea when you're doing selling that you really use some type of conceptual selling. Here's a little chart one of our companies came up with. Now, we're going to talk a lot about Forethought today, but this is one of our other carriers makes available. This is a client-facing product. You can actually use this with clients. And if you look at this piece here, you can see that there's a blue line, there's a green line, there's a couple different things going on. Now, the blue line, as most of you can imagine, the blue line is the actual S&P 500 from 2001 to 2014. As we know, there was a couple of big dips there. Look at the big dip at 2008, 2009. Now, the green line is actually showing what an indexed annuity would have done in the same time frame that the blue line there with the S&P 500. Now, as you can see, as the blue line goes down, the S&P is having those poor years. You can see that the green line, the indexed annuities, it's just moving sideways. That's where the indexed annuity cannot lose your money. Now look at the blue line again. The S&P is starting to go up once again. So the green line, the indexed annuity, is also going up along with it. So you can see as the blue line, the market goes up, the indexed annuity is also going up. But as the market goes down and the possibility of those large caverns hit us like 2008, you can see that the green line, your client's fixed indexed annuity, it's just going to go sideways. Zero is your hero when it comes with an indexed annuity. You cannot lose any money due to the drop in the market. So this is, again, great for the conceptual selling. If you're talking to your clients and you're able to show them a picture like this, definitely make sure that you go through something that really makes it real for them. So this is a piece that's available. Contact Insurance Advisors Direct if you'd like to get copies of them. The company makes them really easily available, and certainly they can make them available to you to talk to your clients about. So here's some of the national CD averages. Now, being that we're talking about a fixed rate product, a fixed indexed annuity, where are people keeping other fixed market money? Where are people putting their money to keep it safe, to keep it secure? And CDs, as everybody knows, is a big place for that. They put the money in the bank, and you look at the one-year CD averages nationally, 0.27, 5-year average, 0.89. It's pretty dismal right now where the fixed rates are. People are not putting their money into a CD to get interest these days. They're putting it in there for the security, the safety. They want to have certain money that they have earmarked that they cannot lose. This is our flag. This is our definite tell that clients in retirement, pre-retirement, they want to have a safe place to have their money. Imagine being able to give all the safety of a CD type product, but with better interest and better guarantees. So that's going to lead us into talking about Forethought and their products, and we're going to go through how the product of an indexed annuity, and especially the ones through Forethought today, are going to be able to fit all these goals that your clients are wanting. When you're talking to clients and they're wanting their guarantees, Forethought is a great option. So let's jump into it. So first off, if you haven't heard of Forethought, I got a little chart here from 2014. These are real numbers. Forethought was the 6th largest seller of indexed annuities in the United States in 2014. They did more in the individual annuity space than many carriers, MetLife, Pacific Life. Look at the carriers there. You're going to recognize a lot of names. So Forethought, although maybe not a brand name company that you may have heard of or maybe your clients have even heard of, the reason that they're such a great selling company is because their products are ultra competitive. It's good, easy to do business with them. Their clients really like doing business with them, and you as an agent will like the fact that they do a great job for you. So keep that in mind. Forethought, although if you haven't heard of them before, don't worry about that. They're an A-rated company, and they do a great job in the annuity marketplace. So here's the 150 plus product. Now, they do have other products available. I'm going to focus on the 150 option today. It's a really good product for both the guaranteed lifetime income space as well as the accumulation of the client's wealth space. So this 150 product actually gives a couple of bonuses on the income account value. So We got two different things we're talking about with an indexed annuity, two different buckets, if you would. You have bucket number one, which is your client's growth. That's where they're getting interest earned every year. And then you have bucket number two. Now, bucket number two is interesting because it's how the company is going to determine the amount of guaranteed lifetime income your client can get, no matter how long they live. So with the 150 plus product, the bucket number two, the guaranteed lifetime income bucket, has the ability to get up to 4 bonuses to that bucket. Your client puts $100,000, just give an example, into a indexed annuity, the 150 plus product. Day one, their bucket number two, the income account value is going to be $120,000, 20% bonus. If they decide that they're not ready to start taking income yet from the annuity, they have other sources of income, pensions, Social Security, some other things that they're working off of, and they can let this grow a little bit. In year number 3, they're going to get another 15% bonus to the bucket number 2, that income account value. And they're going to also have the opportunity at the end of year 5, if they still haven't taken the guaranteed lifetime income, to get a third bonus, another 15%. That's 50% worth of bonuses over a 5-year time frame that your client has the ability to get with the Income 150 Plus product. And oh, by the way, if your client is looking at this product as longevity planning, if they're looking not to take money for at least 10 years down the road from this indexed annuity, there's even the potential of a fourth bonus. Now, the fourth bonus, and I'm going to show an illustration of this later, so I'll show you how this works. But the fourth bonus is based on the amount of interest that bucket number 1 has gotten through the first 9 years. So bucket number 1, the actual interest earning in the contract, is going to get a 50% bonus, and that's going to be put into bucket number 2. So if, for example, bucket number 1, your client's actual interest earned is at $100,000, there's another $150,000 that's going to be put into bucket number 2. That's the way it works. It's just based on the interest earned. So for longevity planning, also a great option. Somebody wants to put this in at age 65 and not start taking money out until age 75. This is a pretty spectacular story that you have to tell with the 150 Plus product. So here again are those bonuses. And take a look at how you have the ability to show the 150% of the value beginning with year 10. Here's an example of how that works. $50,000 of interest credited for the first 9 years. That bonus, that 150% bonus, is a $75,000 income bonus that's going to be put into that bucket number 2, into the income bucket. So it's a beautiful scenario, and the illustration does a great job of showing this. And I'm going to show you one of those illustrations shortly here. So don't get lost in the fact that we got a lot of numbers moving along here in our presentation, because once you see an illustration, you're going to see that it's a great way to illustrate this to a client. So a couple of other benefits on the Income 150. Full account value is always available, 100% at death, to the survivor. There's a nursing home waiver and a terminal illness waiver, so there's also some living benefits in the account value. So if your client has some money and it is in that CD and they want to have that money grow a little bit better than a CD will grow, they also have the ability to pull that money out, 100% of it, if they're confined to a nursing home, which of course I'm going to talk about a little bit later. As those of you in the long-term care market space have learned over the years, many people are going to need some type of long-term care in their lives. So here's our illustration, and this illustration is just one page of it, but take a look at the 2 columns here. So we have the maroon purplish column. That's your bucket 1. That's the money that's actually getting interest earned. Now you can see there's a couple of zeros in the interest earned column. That means that the market in that year went down, but they got 0 credited to their account. They could not lose money in that year with a fixed indexed annuity. And then you see the interest in the years that were positive. Now in the blue column, what you're looking at, that's your bonuses for bucket number 2. That's your income account value. take a look how you get that 20% bonus in the first year, your 15% bonus in year 3, and your 15% bonus in year 5. And then, oh, by the way, in this illustration, I have income starting in year 10. So there's also that fourth bonus, which, as you can see there, is about $58,000. So the client put in $100,000. That fourth bonus is equivalent to a 58% bonus of their initial principal. That's correct. A 58% bonus in this illustration is being put into bucket number 2 for them to get lifetime guaranteed income. Talk about longevity planning. This is the tool for you to use. And if you show the power of this to clients, I'm telling you, it happens every day with the agents we work with. This is going to make sales for you happen in the indexed annuity marketplace. And these illustrations are easy to run. Jason would be happy to get those for you at 5 a day. He'd love for that. So take his number, call him with any client you're working on, and see how the Income 150 Plus can really energize your indexed annuity sales. And oh, by the way, if you are selling the 150 Plus product, there is an incentive, an additional commission based on production that they are making available. So this, you can see there the numbers starting at $750,000 all the way up to about $3 million. You can see that you are bonused on your sale. So if you hit that $750,000, that whole $750,000 plus is going to get a 0.5% commission bonus to you as the agent. When you hit the million, it goes to 1. You can see how it escalates with the more you do, and it's retroactive to all that business. So do we want to make more or do we want to make less? I think we know the answer to that. If we can do a great job for our clients, if we can fit them into a space with an indexed annuity for at least a portion of their money, diversify their accounts, take a look at that rule of 100, talk about diversification, talk about guaranteed lifetime income, talk about longevity. Conceptual selling will make your sales in the indexed annuity marketplace grow. And oh, by the way, we're going to give you a little bit additional commission if you are going to look at the 150 product with Forethought. And again, it's not the only product Forethought makes available. That is, though, the only product that this bonus specifically is available on. So any questions, again, Insurance Advisors Direct, Jason got his number, give him a call. We'll go over everything one-on-one. Now, I also wanted to touch base a little bit on another product I had available. Now, this is not an indexed annuity product, but this is a product that has been just growing and growing in sales over the last year. It's called the Forethought, and it's a fixed annuity. Again, this is a fixed annuity product, but it has a long-term care rider attached to it, a true long-term care rider attached to it. So we're going to talk a little bit about the day of today about the likelihood of long-term care, the need for it, and then how the benefit of the Forethought product, which you'll have access to by being contracted with Forethought with Insurance Advisors Direct. This is a proprietary product. Not all agents who sell Forethought nationally have availability to this, but Jason and Insurance Advisors Direct, they have been approved to sell this product because of their background in the long-term care market space. So if you're interested in having these types of additional benefits, I'm telling you, you got to get hooked up with Jason and Insurance Advisors Direct to sell it. So a lot of likelihood of long-term care. Those of you that have been selling long-term care know the statistics, right? More and more people are needing long-term care. 70% of people over age 65 will need some type of long-term care. This is just the reality of it. As we get older, we don't become healthier, right? And who's going to take care of us? We talk about the sandwich generation. And we talk about the fact that what are your kids going to do? They're going to have their own families. They're going to have their own jobs. Can they give you the type of care that you're going to need in your senior years? Possibly no. It's a very difficult situation for the family, but if there's some type of protection in place, it goes a long way. So again, think about repositioning an asset. Imagine that money that an individual has sitting in a CD and growing at 0.27%. Imagine if they took that money, put it into a fixed annuity that also had the long-term care benefits of it. I'll tell you what, ask them to pick up the phone and call their bank and ask them if they're going to give them any type of additional long-term care benefits if they need it with their CD. I guarantee you we know the answer to that question. So here's a great conversation, again, to have with your clients. How are they going to fund long-term care? How are your clients going to fund long-term care? Look at the cost here. These are the average cost of long-term care. It's going to vary a little bit in whatever area you're working, but this is pretty much on par with what's going on in the world of long-term care services. So it's some extreme cost. You imagine the debilitating cost this could have on somebody's retirement plan if they had to spend this type of money. So has your client, do they have that money in a CD? Are they in a money market account? Do they have it in a savings account? The fixed rate right now on this product, it depends on how much you put into it, but if you put into it under $200,000, the current fixed rate is 2.65%. If you put in $200,000 or more, the fixed rate is 3%. Imagine if you took your client's money that's making 0.27 and gave them 2.65. That's a pretty substantial increase in interest to a product that is going to give them all the safety that they have in a CD. And it's going to give them the ability to also get some long-term care services, which we're going to go through a little bit here, more detail in a minute. So fixed annuities, we have interest being credited. There's income options. There's tax deferral. That money from the CD moving over to this fixed annuity, that's still their money. That's still their money. They can certainly take withdrawals from it. They can certainly, at some point in the future, they decided they wanted to move it somewhere else. It's not a use it or lose it scenario with this annuity with long-term care services. So you're going to have also long-term care benefits. And the long-term care benefits with this are going to give you the ability to either double or triple your client's account value day one. And all they do is a simple process. There's a telephone screening process. There's no APSs. There's no paramet. Depending on how your clients answer a handful of simple questions, and we'd be happy to get you the underwriting questions. You can take a look at the questions and how easy they are. If they can answer some simple questions, they're going to be able to get either 2 times or, if they get a preferred rating, 3 times their account value. So imagine your client who's got $50,000 sitting in a CD. They have $100,000 or $150,000 of long-term care benefits in a fixed annuity that they're getting better interest than they would with a CD. They cannot lose their money. It's still their account. They can do other things with it if they decide that in the future they want to change their mind. So pretty strong story, again, you have here with the Forethought product. And here's that scenario, 2 times or 3 times the contract value. So just a great way to show clients, again, how to do some type of planning for their retirement without really making it too hard of a sale. Listen, people want to know that they're covered. People want to take care of it, and then they want to go into retirement, and they want to play with their grandkids. They want to go golfing. They want to go on vacation. It's nice to know that their finances are buttoned up. So this is a great conversation to have, along with the income planning conversation you have on the indexed annuity side. And again, it's available through Forethought with this Forethought product. So Forethought benefits, tax deferred growth, right? It's a deferred annuity. It's a fixed product. Long-term care riders charges are not taxed as distributions. Let me explain how this works. If you have non-qualified money and you start taking that money out, the interest that's being earned in that non-qualified money is going to be taxed as income. If you have benefits on the Forethought product that are coming out paying for actual long-term care services, those distributions are not taxable. So you have a non-qualified account, growing tax deferred, with the ability to receive double or triple the benefits down the road that is also going to be tax deferred if used for qualified long-term care services. It's a compelling story. I think we can all think of different people, different clients that we worked with that this might be a great fit for. Get some illustrations run. Go talk to your clients. Pull some files from out of your filing cabinet and see who you can talk to about this type of program. Very straightforward. And it's a very simplified issue. So again, if you want to get a copy of those underwriting questions, contact Jason. All right, so here let's talk a little bit about the amounts available to pay for long-term care. So let's say your clients have the income tax rate of 28% and they have $100,000. let's take a look at two of the most common types of accounts that would yield after 15 years. So we're talking about a CD, and we're talking about our 3% fixed annuity rate. Let's say they put in that $200,000 into the Care product. So after 15 years, which account is looking a little bit better, right? CD, $100,000 to $105,000. And then take a look at the fixed rate product, like the Care product with the long-term care benefits. Your $100,000 has now grown to $140,000. So take that $140,000 and double it. That's your long-term care, or triple it if they get the preferred rate. That's your long-term care benefit. So as the account grows, your long-term care benefits grow as well with the Care from Forethought. So it's a pretty compelling story to show your clients. So here is going, I guess this is just really reiterating what I just mentioned there. Take a look at the double and the triple, the benefits on the Care. So here's the double. Take a look at it. Really, the illustrations do a great job. And then the preferred, which they call Premier, that's your 3 times benefit. It triples or doubles the value for long-term care. And if you're receiving long-term care services, the money you're taking out from your non-qualified account, even though interest was credited into it, is coming out tax-free. It's a beautiful scenario. And it's going to cover all levels of care. The Care product is a real long-term care plan, home care, nursing, assisted living, adult daycare services. All of these types of benefits are covered with the Care product. This is a true long-term care plan attached to the fixed annuity. And here's that simple, easy application process. You're going to have that telephone interview. You're going to answer a couple of easy health questions, and that's going to determine right there on the spot, do they get 2 times the benefits? Do they get 3 times of the benefits? The health questions to qualify this really just come down to, is your client already a long-term care claim? If your client needs assistance with their activities of daily living, their bathing, their dressing, etc., if they have a chronic illness like Alzheimer's, that's automatically going to knock them out. But other types of illnesses are not going to knock them out. Other types of illnesses that traditionally would not be taken by a regular long-term care program can be taken with the Care product. So don't assume if you know a client that, well, they're not in the best of health, I don't think they qualify for a long-term care program. They may not even realize they can qualify for a long-term care program, and maybe they've even tried in the past and have been turned down. So again, this is a great scenario to talk to individuals about with planning, and it's a great reason to go out and see some clients again that maybe haven't seen in a while and talk about some other things going on. So here's a current illustration. Now, this is one page. I'm illustrating $100,000, so I'm illustrating at the 2.65%. The column on the left, that's your guarantee column, and the column on the right, that's your growing at the 2.65%. So you can see you can never lose any money. It's a fixed account. But look at the column on the right. Look as your account value grows, how also the value of your long-term care, not only your monthly maximum long-term care benefit, but your overall pool of long-term care dollars is also growing based on the interest being credited to your account. So again, just some great options. The illustration software does a great job. I always try and come back to lean on the software during these types of presentations because we go through so much information in a short period of time. What we always hope doesn't happen is that you don't get lost in all the details that we get thrown out to you today, that you come away with saying, listen, these concepts make sense for me to have in my practice, and these concepts are going to help me help my clients. And in consequently, because of that, it's going to help me grow my business, grow my sales, and grow my commissions. All win-win situations. So come down to the one-on-one conversations, have those with Jason, get some illustrations, run, really get the ball started. Nothing happens until somebody sells. So if you think these are great ideas, you got to get signed up with Forethought. You got to talk to Jason about that. You got to get illustrations run, and you have to start talking to your clients and talk to them today. Listen, no time is better to start bringing up these types of concepts. But we want to make sure you get contracted first. We want to make sure we get you all the hard copy supplies, and then the good folks over at Insurance Advisors Direct do a phenomenal job of getting all that stuff going, and then help you make some additional sales. So, Jason, I don't know if you can see if there's any questions. I don't see any right now, and I apologize. I saw a couple things come up that there was some technical difficulty, so I hope it's not too bad. And most of the presentation has gone through pretty well. I know we're recording it, so hopefully that recording can also come out to everybody. So anything that was missed or for some reason technically wasn't working well, we can get that over to all the agents that are on the call here today. But Jason, do you see any type of questions that I'm missing here? Maybe I don't see them, or does it look okay?
It looks okay. I think we've covered everything thoroughly, but of course, we'll be spending just the next couple of minutes with everyone. Again, I just wanted to go through our sales and marketing success system. But as Bob mentioned, there's a lot of great opportunities out there in the fixed index annuity market. We see, these sales over the last few years growing tremendously. And we know that each of you on this webinar today may be at different stages or levels of experience with annuities. So again, regardless of your level of experience, we would love to hear from you. And some of the things that we have done, I know Bob mentioned, looks like there is one question, Bob. Does the charge, so the 95 basis points, decrease the contract value in down years?
Yeah, it's a good question. The income, the bucket number 2 we spoke about, that's a rider on these programs. So there is a 0.95 charge for that rider that comes out of the account value. And in a year, if the market was to go down, and we know that probably the history of the S&P, if we go back 40 years, it seems as though about 3 out of every 10 years is some type of down year with the S&P 500. Which is the main index used with the Forethought product. So in those years, if there's a zero and you have the income rider attached to the policy, that charge still does get added to it. So if that 9.5 charge will come off on a 0 year. Now, in a positive year, obviously, it doesn't matter as much. Just know with the marketplace, with an indexed annuity, 7 out of 10 years on average are always positive years. So your client still will do very well, and that charge doesn't come out specifically of the account value for the income that your client will get. So if they are looking at this as a longevity or an income play down the road, the charge doesn't actually impact the amount of income that they'll get guaranteed for life. But like every indexed annuity out there in the marketplace, they do have some kind of charge built in for that. So I hope that answers the question there.
Thanks, Bob. And what some of you may consider too is, as Bob mentioned, this would be if all of the money was tied or maybe put into certain crediting strategies. For example, I know with some of their products, the fixed account. What is it, Bob? Maybe around 2.5% right now.
Yeah, so you certainly have the option to put part of the money in the fixed account, and depending on the product, it is somewhere around the 2.5% mark.
So in that case, that could potentially be a hedge, though we can't predict exactly how the year's going to go. In those down years, we do see many of our annuity clients putting a portion of their money into the fixed account, which of course is a guaranteed return, which could also hedge, maybe part of the cost for those riders as well. So just another thought. All right. I haven't seen any other questions pop up. So again, as I was mentioning before that question came up, is a little bit about each of you and the level of experience with annuities. We work with a lot of agents who are in the senior market, in the Medicare market, and we get asked a lot by those agents, I know my clients have safe money. I know that they're putting money into CDs. I know that they have money that they want to use for future income. I don't know how to bridge that conversation. I don't know how to ask those questions. I don't really know how to get into this because it's outside of my comfort zone. And we realize that that's maybe a bigger population of agents than you may think. So in order to help in those areas, we have created here a sales and marketing success system, and actually have put together a whole booklets of information on bridge statements, what to say during your presentation or after your presentation, or maybe it's on your annual review with your clients. We have different pieces that can bridge into that conversation. We have some of those custom marketing pieces that can show them some of those graphs and those charts. Again, just to give them an idea on how a fixed annuity would work and be in their benefit. So again, for some of those you who may be new to this area, we certainly have the training, we have the tools and the presentation material to help you start that conversation. And again, if this is a market that you're actively involved in on a day-to-day basis, great. We would love the opportunity for you to call us, let us run some quotes, and show how, especially these income products with Forethought, how well they perform against other products in the market. And to be honest, and I don't know if Bob touched on this, but we have had nothing but positive feedback from the agents that we work with who have gotten involved with Forethought, the ease of doing business with them, the agent-friendly service and support that they receive, in addition to a great portfolio of products. So we really are excited to talk to you today about the Forethought products. But again, take a look. These are some of the items that are included in this sales and marketing success system that we've created within the annuity market. So if you have a need and you have an interest in any of those tools, please let me know, and I'd be happy to provide you more information. Of course, these are tools reserved for agents who are contracted with Insurance Advisors Direct, so we'd love to be a partner with you. So again, give us a call. We'd love to hear from you. We'd love to earn your business. And, of course, we'd love to see you get involved with the Forethought products. So, again, here's our contact information. Thank you very much, Bob, for your presentation. Thank all of you for spending your time with us today. We hope this information was beneficial to each of you. Again, here's our contact information, 800-381-0977. My personal extension is 110. Please feel free to contact me. And being this is recorded, if you have any interest in the recording, please either email us or give me a phone call, and we'll make sure that we send that over. So if there are no further questions, Bob, is there anything you'd like to add?
No, I think we went through everything really well here today. So, again, thank everybody for taking some time out of their day. And, Jason, thanks again for having me on the call, and we look forward to doing business.
All right. Again, thank you all, and we'll be in touch. And, again, feel free to give us a call. Have a great day.